Listen up. The markets are moving in ways that could directly impact Bitcoin. Home sales blew past expectations, job postings are dropping, and we're entering a macro setup that could send Bitcoin prices higher. If you're holding Bitcoin or even thinking about it, you need to hear this right now. What's up, family? It's Coach Masi, and you're locked into the Daily Hodl. Remember, this is for educational purposes only, not financial advice. But hit that like button, hit subscribe if you haven't already, and let's get into the Bitcoin and financial news of today. Let's start with housing. Analysts expected new home sales in August to hit about 650,000 units, but the reality was shocking and even better than expected. 800,000 units. That's a huge surprise. The immediate driver, lower mortgage rates. Especially after the September rate cuts, it was dropping all the way up into that point because they expected it. Now, why should this matter to you as a Bitcoin holder? Well, higher home sales can seem bullish for the economy. But here's the deeper story, though, that people might not be seeing. For every buyer, there are now 35% more sellers than buyers. That means more inventory could be hitting the market than demand can handle. Prices may stabilize or even dip if this trend continues. So if traditional markets start showing cracks, investors often look for alternatives like Bitcoin as a decentralized and finite asset. It becomes like a natural hedge when real estate or fiat markets are uncertain. This isn't just theory, it's history. In moments of economic uncertainty, digital gold shines. And don't forget, even with 1.4 million buyers in August, that's still the second lowest number since 2013. So while the headline number looks impressive, the underlying demand is weak. Weak demand in real estate can pressure traditional wealth storage systems, creating a psychological push toward Bitcoin. Next, let's look at the labor market. Job postings on Indeed fell 8% year over year in the week ending September 12th. That's the second lowest level since 2021. So why does this matter for Bitcoin holders like yourself? Fewer job postings signal slower hiring and potentially lower consumer pressure, or consumer spending, I should say. And that puts pressure on traditional financial markets, stocks, bonds, and even real estate, as I mentioned before. For Bitcoiners, this is where opportunity lies. When traditional markets slow, more people start seeking alternative stores of value that are outside government control. Bitcoin becomes more than an investment. It becomes a hedge against systemic risk. And that's why it's great. Also, a slowing job growth often increases liquidity in the market. So people may look to invest spare capital where it's decentralized and secure, which historically drives Bitcoin adoption. This is exactly the kind of macro setup the savvy hodlers like yourself watch for. It's not hype, it's timing. That's important. Now let's connect the dots. August economic surprises create a macro setup every Bitcoin holder should care about. Housing volatility, while lower demand and higher inventory could shake confidence in real estate wealth. Bitcoin is that hedge in this type of systemic imbalance. Now, as rates lower, real estate might boom. Job market slowdown. Less hiring often pressures traditional asset growth, making decentralized assets more appealing. And rate cuts and liquidity. Lower interest rates increase money flow, some of which historically finds its way into Bitcoin or real estate, and right now it's going into gold, of all things. For hodlers, these aren't just numbers, they're signals. When you see cracks in fiat systems, Bitcoin's adoption narrative strengthens. Every time traditional markets face uncertainty, crypto attention spikes, and we often see strong buy signals for long-term hodlers. So, again, what should you know or do as a hodler? Keep watching housing and job market trends. They can be leading indicators of market stress. Though if interest rates continue to rise, please expect more buyers to hit the market looking for homes and the United States to make concessions to get people off the sidelines to buy and to build. So stay disciplined with your Bitcoin holdings. Market noise will increase as traditional indicators fluctuate, but volatility is often where opportunity is born. I love buying the dip just for that reason. So it's important you share your knowledge, like this video, and the more people understand macro trends and why Bitcoin is a hedge, the stronger adoption becomes. Now, this isn't just about personal wealth. It's about growing the network effect, and that's what I want to do here on this channel. Remember, this is for educational purposes only, not financial advice. You spend your money how you want to do that. But understanding the macro picture can help you over time with your moves, and at least give you some peace of mind when you're positioned in an asset designed to survive systemic volatility without getting anxiety and stressed out. Family, here's my question for you today. With August home sales behind us surpassing expectations, more sellers than buyers, job postings falling, and Bitcoin gaining attention, Where do you see the smartest money opportunity? Is it real estate? Is it fiat markets? Or is it Bitcoin? Comment below and let me know what you're thinking. And don't forget, like, subscribe, and share this video with anyone who wants to stay ahead of Bitcoin and the world's financial news. Well, that's your Daily Hodl. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you in the next one tomorrow.